If you're interested in both EV and Fintech stock, then look no further ahead and consider Ideanomics under the ticker symbol IDEX because this could be the best speculative stock to invest in 2021. So before I get into why I think Ideanomics have massive potential ahead, in other words giving you my full bullish thesis and my price target, let's first talk about who Ideanomics is, what is their business model all about, and what separates them from the rest of the EV and Fintech company, because I think many people are actually confused about what this company is all about. So hopefully I can get that out of the way for you, that way you will know if this stock interests you or not, and of course I will let you know if I'm planning to buy Ideanomics as well by the end of it after going through their valuation and balance sheets. But before that, real quick, if you haven't already, please hit the like button so that this video can reach to a brand new audience. It really makes a huge difference to my video and I will highly appreciate it. So to begin with, Ideanomics is a financial technology company headquartered in New York City that primarily focuses on industry experiencing technological disruption, particularly in the EV and Fintech industry. Think of it like Tencent, where Tencent owns multiple subsidiaries in internet-related services and products including in entertainment, artificial intelligence, e-commerce, and other technology. Well, similar to that, Ideanomics also owns multiple subsidiaries, but in this case, EV and Fintech industry. As Ideanomics accurately put it, they call their EV division as Ideanomics Mobility, and on the other hand, they call their financial services and fintech products that incorporate blockchain and artificial intelligence as the Ideanomics Capital. Right now, obviously, they have a lot of things going on for them, so let's go ahead and talk about Ideanomics Mobility first, and then I will go through Ideanomics Capital shortly after that. Starting with their most important Ideanomics Mobility division, Mobile Energy Global, short for MEG, are highly focused in China to provide group purchasing discounts on commercial electric vehicles, EV battery and electricity, as well as financing and charging solutions based on the customer's requirements. To make it simpler to understand, think of it this way. When fleet operators decide to switch their fleet vehicles from internal combustion engine to EV, naturally there are three things that this operator would face. One is that there are over 100 different EV manufacturers for fleet operators to choose from, especially in China, which makes selection super difficult because it's not like switching to passenger car like Tesla or NIO where they are often advertised. And two is that after going through the long selection process in choosing the right vehicle model, these fleet operators will then need to find a lease financing company to finance the switch to EV, which in this case can be pretty confusing because this actually requires a higher deposit to cater removable or swappable battery that can reach up to 50% cost in EV cars since it does not have a true blue book value yet. And then finally choosing the right charging solution, whether this operator prefer to get charged through prepaid or wholesale electricity from their local grid suppliers. And this is where Ideanomics MEG segment comes into play by solving the issue just for them by using what is termed in short as sales to financing to charging business model, S2F2C, which essentially works to resolve the three things that I have mentioned earlier, acting as the middleman to bring the fleet operator, manufacturer, financing company, and grid supplier together into one picture. Through this unique business model, Ideanomics actually makes money by taking a small percentage of fees for every successful transaction. Typically, this fee structure goes from 2% up to 15% depending on the group of commercial vehicle ranging from trucks, buses, taxi to medium and heavy duty vans. Just as of recently, Ideanomics announced joint venture between China ride-hailing giant Didi, equivalent to Uber, and EV maker BYD to deliver 2,000 EVs. Now obviously, this is a win-win situation. Aside from that, as you can see, they also have multiple business aspects aligned with their sales to financing to charging business model. Right now, they also have the Medici Motorworks division catered for specialty vehicles and pickup trucks in the US. They also have Tread Electric, an approved Malaysian EV manufacturer and distributor catered for EcoBikes, SolarTrack, California-based manufacturer and distributor catered for e-tractors. Massive company, by the way. They also recently acquired WAVE, a top company in the electric charging solution for medium and heavy duty EVs. WAVE's customers include the largest EV bus system in the US, and its partnership include Kenworth, BYD, and more. And again, this is a really huge company that I'm talking about. Now let's talk about Ideanomics Capital. In Ideanomics Capital, there are three companies that cover services related to the fintech industry in Dbot, Intelligenta, and the recently acquired Timios. DBOT essentially offers broker-dealers in operating an ATS for equities not listed on the New York Stock Exchange or Nasdaq. In other words, we are talking about OTC market. Then they also have Intelligenta, an AI service and solution company for financial institutions and regulators. Intelligenta uses state-of-the-art artificial intelligence and machine learning to provide financial service to clients with deeper insights that improve decision making, risk management, client retention and growth, and other efficiencies that drive significant return to investment. And then finally, we have also the recently acquired Timios, founded in 2008 to provide a smart real estate transaction experience for buyers, sellers, and professionals that could bring in over $100 million in revenue in 2021. If you're wondering, why does Ideanomics Capital matter? Well, historically, there was actually a link for this fintech to EV industry. But just as time goes on, they have actually drifted off a little bit. But there's actually a large financial services component for the battery charging energy, lease financing, and the blockchain ABS refinancing need. So for example, with traditional vehicle, junior analysts have to take picture of the vehicle VIN number. But through Ideanomics blockchain, you do not have to go through this, as you can ship all this information through digitization in blockchain. So these are actually massive catalysts that will further hyper-surge Ideanomics EV and Fintech division over the long term with their sales to financing to charging and Fintech division business model. Now that we have understood what Ideanomics business model is all about, let's get into serious business and talk about why I think Ideanomics has massive potential ahead. Currently, Ideanomics is trading at $1.72 billion market cap, falling just under small market cap stock. The reason why I like this company is because of the massive total addressable market. Basically, the higher the TAM, the better it helps to determine the level of effort and funding that company or person should put into a business line. Right now, we are looking at $80 billion TAM in the EV sector. Ideanomics offers EV financing service, pickup trucks, manufacture and distribute eco-bikes and e-tractors. They also offer charging solution, one of the big players in the US by the way. Then when you combine the projected $80 billion TAM by 2025, I believe Ideanomics can be massive in the market over the next decade. Plus, considering that the Chinese government is trying to accelerate the conversion of all fleet vehicles and taxis to EV by the next decade, Ideanomics is in a very unique position and could see sequential growth in both deliveries, contracts, and revenue. So by the end of 2021, revenues could be up to $50 million, which is almost triple of what Ideanomics is currently making. Now obviously I can go on and talk about how great their potential is, but at the end of the day, Ideanomics have to convince the market through fundamentals. Because if you remember Ideanomics in 2019, 2020, they were actually down because their fundamentals were not that great. So looking at their latest Q3 earnings report in September 2020, currently they have $27 million cash in hand. At my first impression, I have to say that $27 million will not be enough money for them to sustain their business until the end of 2021, especially given that they have been aggressively acquiring companies like WAVE and Timios in recent times. But the great news is that they are well aware of that and have entered into a standby equity distribution agreement with a company called YA2 on September 2020 for the offer and sale of up to $150 million in exchange for Ideanomics common stock, which should allow this company to sustain until the end of 2022 or further acquisition and investment should Ideanomics see fit. Well, understandable given that this company is still in the growing stage. Over the company's last 3 reported quarters, revenue has come in at $379,000 and then $4.69 million and finally $10.6 million. So Ideanomics is actually doing great over here as they are indeed progress. It definitely seems to me that Ideanomics has firmed up on its balance sheet, revenue has increased, more cash in hand, and have reduced debt. So as long as revenue continue to grow, which seems plausible from MEG, Timios, WAVE, and their recent joint venture with DD and EV maker BYD to deliver 2,000 vehicles, I think Ideanomics has more room to grow in 2021. So finally, to answer the question if I'm planning to buy Ideanomics, for me personally, I can definitely see myself buying Ideanomics as I think $8 in the near term seems possible, especially considering that they have a sustainable business model that can be effectively scaled in the coming years. years. I believe the best way going around Ideanomics is by adopting the dollar cost average. After all, the stock has rose from $2 to $5 in just over a month, so every potential dip could present better risk per reward ratio than it was before. Really, at the end of the day, it really depends on whether you truly believe in this company business model or not. Well, that's all I have for this video. As always, please hit the thumbs up button so that this video can reach to a brand new audience. Also remember to subscribe for new future video if you want to learn and watch more on my elaborated stock research. Till next time.